What if I told you that very soon you could use crypto to buy a slice of that luxury apartment building down the street, or that famous Van Gogh painting hanging in a museum, or even shares in that hot new startup everyone's talking about? And BlackRock, the world's biggest asset management firm, has eyes on these too. The technology that I'm talking about today is tokenization. It might sound crazy, but the blockchain technology behind cryptocurrencies is making it possible to tokenize almost anything in the real world. Turning all sorts of assets from real estate to artwork to investment funds into crypto tokens that can be bought, sold, and traded just like Bitcoin and Ethereum. In this video, we are going to explore this wild new world of tokenizing real-world assets on the blockchain. We'll break down what tokenization actually is, how it works, and dive into some mind-blowing examples and use cases. Of course, I will also be sharing some of the projects that I invested into in this sector. So get ready to have your mind blown as we bring the fancy, exclusive world of alternative assets and investments to the people through the power of crypto. Let's go! Okay, let's start with the basics. What exactly does it mean to tokenize something? Simply put, it means creating a crypto token on a blockchain that represents ownership rights or a share of a real-world asset. These tokens could represent things like ownership of physical assets like real estate, artwork, collectibles, shares of stock or equity in a private business, ownership of other financial assets or investment funds, and licensing rights for intellectual property such as patents or media. After being tokenized, these assets can then be easily traded, fractionalized into smaller pieces, used in crypto lending or borrowing, and so on, all while leveraging the transparency and security of blockchain technology. So how does this magical tokenization process actually go down? Let's walk through a simple example. Let's say a real estate company owns a $10 million apartment building that they want to tokenize and sell shares of. First, they would create a legal entity like an LLC to officially own the apartment building asset. This LLC represents the tokenized asset. Next, they will create 10,000 tokens on a blockchain like Ethereum. Each token equals to 0.01% ownership of the LLC that holds the apartment building. Then, they sell these 10,000 tokens through a token offering or auction, raising $10 million in crypto from investors who now collectively own the tokenized apartment building asset. The token holders can freely trade their tokens on crypto exchanges, and the legal entity managing the real estate will use the funds raised to pay out earnings to token holders, like distributing rental income or profits from eventually selling off the property. For physical assets, the tokens represent legal ownership rights to the underlying asset managed by that legal entity. For things like company shares or funds, it's more straightforward as the token itself is the ownership stake. It's honestly brilliant. Tokenization allows you to fractionalize and democratize ownership of assets that have traditionally been gated and exclusive to only the ultra-wealthy and elite investors. So, tokenizing real-world assets on the blockchain unlocks all sorts of awesome potential benefits, like fractionalized ownership, as tokenization breaks down large, indivisible assets into smaller pieces that everyone can afford. Instead of having to shell out $10 million to buy the entire apartment building, you could buy a $1,000 token representing just 0.01% ownership. This drastically lowers the investment minimums and barriers to entry for alternative assets like real estate, artwork collectibles, and so on. There will also be increased liquidity, as trying to sell a house or flip a piece of art is an expensive, slow, and arduous process. By tokenizing these assets on crypto exchanges, you can tap into a deep global liquidity of crypto markets, where tokenized ownership can be easily bought and sold 24/7. Next, since these tokenized assets live on the blockchain, they can be coded with programmable rules through smart contracts. For example, automatically distributing rental profits from a real estate asset, directly to token holders' crypto wallets. And lastly, instead of being limited to traditional financing like bank loans or VC funding, companies and asset owners can raise capital by selling tokenized ownership stakes to everyone across the world through crypto crowdfunding offerings, providing these companies with more options. On top of that, the world's largest asset manager, BlackRock, made massive waves by launching their first ever tokenized fund right on the Ethereum blockchain. Yes, you heard that correctly, BlackRock, as in the $10 trillion in asset under management BlackRock, has officially entered the crypto tokenization game. Their new BlackRock USD Institutional Digital Liquidity Fund is pretty much a cash equivalent money market fund. So this is how it works. The Builder token represents ownership in a fund fully backed by cold hard cash money, US Treasury bills, and other ultra-safe assets that are being custodied by BNY Mellon. Here's the kicker. Instead of getting your money market fund yield paid out through some clunky traditional system, the Builder token pays out its daily use directly on the Ethereum blockchain. Crypto tokens literally raining you into your wallet every single day. Now that's what I call a blockchain use case. To make this all happen, BlackRock teamed up with Securitize and they'll be handling the tokenization aspect. Not only that, other big players are involved too, with firms like Anchorage, Digital Bank, BitGo, Coinbase, and Fireblocks all part of making this tokenized fund ecosystem work. BlackRock CEO Larry Fink himself has been hyping this as the next step in their broader digital asset strategy after filing for a spot Bitcoin ETF, saying that it is a stepping stone towards tokenization. So in case the message wasn't clear enough, this is BlackRock putting a massive institutional investment stamp of approval on the concept of tokenizing traditional assets and bringing them onto the blockchain. Now, let's talk about how we can ride this wave by dipping our toes into some projects. One particularly interesting project in the real estate tokenization space is Realo. Their goal is to tokenize properties and create an ecosystem and platform for tokenized real estate investing. Realio network is shaking up the world of real estate investing and crypto by bridging them together through the power of the blockchain. This revolutionary platform offers a secure and transparent way to gain exposure to real estate and other alternative assets, all through the convenience of cryptocurrency. At its core, Realo uses blockchain technology to tokenize properties and investment opportunities, turning them into tradable digital tokens. This fractionalized ownership model shatters the barriers that have traditionally locked out smaller investors from premium real estate or other exclusive alternative assets. Imagine being able to easily invest in a tokenized share of that swanky condo development or private equity fund, then trade your tokens anytime on Realo's decentralized marketplace. No more massive upfront capital requirements or dealing with shady middlemen. Realo's tokenized real estate marketplace operates as a true decentralized ecosystem, powered by crypto and the blockchain. With seamless token trading, with liquidity and transparency, built-in KYC and AML compliance, baked into the protocol, direct access for investors of all sizes, and passive income streams from cash-flowing real estate tokens, and allow you to invest across properties globally to build a diversified portfolio. But don't think Realio is cutting corners. They have a rigorous vetting process and due diligence to ensure only high-quality vetted properties and deals make it onto their platform. Security and investor protection is paramount. With real estate tokenization merging with the world of cryptocurrency and DeFi, Realio is pioneering an entirely new paradigm for assessing and investing in previously exclusive alternative assets. Whether you are a crypto whale or a small retail investor, Realio unlocks unprecedented opportunity to build wealth through tokenized ownership of premium real estate, private funds, and other unique asset classes. Now, let's take a look at the tokenomics. There's a total supply of $75 million and a circulating supply of $57 million, with tokens releasing at a rate of 12% of the remaining supply per year, taking approximately 37 years to finish. Also, as of for the recording of the video, the market cap stated on CoinGecko and CoinMarketCap is not accurate, so do watch out for that. So in order to calculate the proper market cap, all you have to do is take the circulating supply and multiply it by the current price, which then brings us to the market cap of 127.6 million as of now. On top of this, Realo is deflationary, which means that there will be firstly, fee burning. A percentage of each transaction fee on a native chain will be burned, and this will be live in Q2 2024. And secondly, every time an asset is tokenized, Realo is being burned and purchased as a fee. Thirdly, 20% of Realo is used to purchase land from LandRush, which is another product of Realo. Amazing, right? So many products. And they will be burned, and the rest will be locked. And lastly, fees collected by the team's validator will be burned too. Next, Realo operates across a multi-chain ecosystem, spanning across 5 blockchains. Firstly will be of course its native chain. Secondly, on Algorand, which can be bought through Maxi. And thirdly, Binance Smart Chain, which can be bought through PancakeSwap. Fourthly will be Stellar Network, which can be bought through OKX. And lastly, ERC20, which can be bought through Uniswap and HTX. However, it would be best to hold Realo on the Binance Smart Chain, as you will be able to earn rewards just by holding Realo in your wallet. With an experienced real estate team, a solid legal structure, and tokenomics that are designed to drive token value up over time, Realo presents an interesting opportunity for gaining exposure to rental real estate investing through crypto. But the reason why I'm investing in this project myself is because the community is arguably the best I've seen in the crypto space. I've been in the community since Realo was 20 cents last year, and everyone was just as hyped about the project as they are now, which is above $2. Crazy, right? Of course, as awesome as tokenization sounds, it's still a very new and emerging space with some legitimate risks and hurdles such as regulatory uncertainty, since tokenization blurs the lines between investment assets, securities, and currencies. There's a lot of ambiguity around how they should be legally defined and regulated in different countries and jurisdictions. And for tokenized physical assets such as real estate, there needs to be strong processes, audits, and trusted legal entities to ensure the underlying assets are properly managed, maintained, and disbursements are handled correctly. There will be tech risks too. While blockchain tech is very secure overall, there will always be the risk of bugs or exploits in smart contracts or apps powering these tokenization platforms. Proper security auditing and controls will be critical. Despite these challenges, overall tokenization represents a revolutionary opportunity to unlock currently exclusive and gated assets and bring the benefits of crypto and decentralized finance to mainstream assets. There you have it, folks. Tokenization is bringing the power and accessibility of cryptocurrencies to ownership of real-world assets like real estate, art, investment funds, and much more. No longer gated to only the ultra-wealthy elites, blockchain tokenization is democratizing and fractionalizing ownership for everyone. If you have enjoyed this video, hit the like and subscribe button down below, and do let me know if you enjoy watching this kind of analysis of projects and narratives, and I'll keep posting more of these. Once again, remember to save, invest, and win. See you!